Good weekend, all. Ira Epstein with your financial market wrap-up, and this wrap-up is your weekly edition. We'll do the weekly charts for this Friday, the 9th of June, 2023. Okay, this is what I call PSH week. What does that mean? Pause, skip, or hike. It's going to be one of those three that we get out of the Fed. Now, a pause is when a market doesn't do anything, and the idea is then you're going to pivot the central bank to the downside, not the upside. Now, let me explain the difference of a skip. We just saw the Reserve Bank of Australia and the Bank of Canada have to raise rates again after pausing. The market criticized them. The newscasters said the banks got it wrong, they stopped too soon, blah, blah, blah. So our Fed's listening to that, and they come up last week, and you started hearing our Fed members that were talking saying, no, we're going to have a skip if we do anything. I'm in favor of that. I'm going, well, what's the difference between a skip and a pause? And they answered it. A skip means you might go up or down. A pause, they don't want to be associated that the Fed got it wrong, and they were thinking they could stop here because they don't have to go with any more, and the next steps are lower. A skip is just a look-see, and they're clarifying it so that the press doesn't come out, because the press did. And I think the newscasters are right. Hey, you got it wrong. You went into a pause, you stopped too soon. Now they can say, we skipped because we knew we might have to go up again. It's all words. The H is obviously the hike. I am in the camp until I see one more report thinking we're going to get 25 basis points unless the CPI report is a report that comes in and we really see a big drop. Now, I think it's the core that has to drop. We know that the headline number's been dropping. It's about half of what it was during the pandemic, but it's the core that has gotten sticky. If that drops, and drops by, let's assume, 0.3, half a point, something, some good number, well, that might put the Fed into the pause mode, or the skip mode. I want to call it the right one. But barring that, where you're just down like we were last time, 1/10, no. Go with the hike. Bury this thing. Get it now. Why not? You got the stock market on fire. The economy's not doing bad. There's going to be problems coming. We know it. These student loans are going to come haunt these poor kids. You wait till you see what goes on. These kids didn't put away money. They were spending it. They bought cars. They did everything. It was never going to happen. Biden's plan was going to get through. They'll just spend. They have the day of reckoning. And no, the kids that worked their way through college, I was one of them in part. I think it's right that they have to pay their debts. It's that simple. I didn't get a free ride. A free ride would be a great scholarship. I wasn't good enough to get that. So that's where we're at. And I'm for that. As for other events taking place, that's it. That is your week. This is going to be the big one, and this is going to tell us where we're at. Now, let's assume that we get the hike. You already hear it, don't you, down the hall? Oh, that's the last one. There will not be another one in July. That's it. We're going to see the dot plots. We're going to see what the members think. We're going to get some real information. It's going to be a big report. Trade accordingly. Trade protective. Don't be a hero going into these reports. When we look at the monthly area chart of closes, you're up 2.73% through the 9th of the month. It's pretty good action. You can see how the market's been climbing up on the weeklies. You closed up this week 0.39%. Okay, nothing big. But it's been churning its way straight on up here. You can see it with the higher lows, higher highs. So if you put moving averages on, you can see that the market has gotten over for the first time in a while the 100-week moving average of closes, but the resistance is right here, the upper Bollinger Band. Markets like to pay attention to Bollinger Bands. They don't like to go through them and just blast away. I even question if the Fed goes and does the skip, if it's not buy the rumor, sell the fact at some point. I'm just giving you, that could be it. I think the most bullish thing that happens is a hike, and you're going to say, what's going on? And the reason I say it is because the market then drops, the naysayers come in and they go, that'll be the last one, and the market runs on the euphoria of that. What happens if they get their way is what I'm wondering, all right? Important. Now, we haven't seen corporate earnings hurt the market. We have to deal with the inflation. The jobs market is at best a wobble, but I'm not convinced it's that even yet. I suspect, and if you watched my morning update today, I was saying, everybody got excited with the 28,000 jobless claims, the new ones we got. First, that was a shortened week. It was Memorial Day week. Second, why aren't you talking about the 37,000 that came off the continuing claims? That's a strong market still. When we take a look at slow stochastics, they're embedded. So when you have an embedded stochastic, even though you're against the Bollinger Band, it tells me that on the breaks, the trade wants to buy the market. That's how I read it. When we take a look at the Dow, you have a higher high, lower low, and you're overbought. Not as strong a picture as the S&P. In the NASDAQ, this has been the market on a tear. Everybody wants to own NVIDIA, Tesla. Yeah, Tesla, Meta. I can go on and on. Have anything to do with Apple? Have anything to do with goggles? Whatever it is, the market's been on a tear. And you see it. This is called that gorilla glue trade. It's when you latch on every week to the upper Bollinger Band. You force these slow stochastics to embed. And it's often accompanied by continuing higher high weeks where you don't go down and take out a prior week's low. That's typically what happens. The Russell came alive. It's as though traders decided, and this is what I think really happened, that's too expensive for me. I'm not going to pay 60, 70 times earnings on different things. I mean, think about it. I think Tesla's 65 times earnings and other car companies are 6 or 7, but you're buying a different type of company, obviously. Well, people are saying, there's got to be some bargains out there. I'm going to go to the Russell. And it joined the parade. Could it get up here, the 100-week average in the upper band? Why not? So until the market takes out, not this week, but last week's low, I don't see why the market can't make a run there. It's looking bullish. Bonds and notes. So let's assume that we get the skip, just for the sake of it. Does the market start taking the inversion of the 210 and flip it the other way at some point? Nobody's talking about that. I'd like to know. Because if the Fed is going to skip, it means they're not coming in to raise rates right now. Is 80 or wherever the 210 is trading about there a little expensive? Something to think about. In the bonds, you get friendly this market if you take out last week's high of 129.16. Barring that, you're still in a downtrend. And if the Fed does the hike, maybe you take everything back to 123.5, the lower Bollinger Band. In the 10-year note, you have a higher high, lower low. That's not a trend. The bias is clearly down in momentum, but it's not trending per se. In the dollar index, we have a lower low, higher high pattern. The market has been on a tear to the upside. The support in the market's the 18-week average of closes. I'd like to see it do more. If it clears this high, then the Bollinger Band. I'm of the opinion that the dollar, if the Fed goes into the skip phase, the dollar starts down on you, and I'd be very careful. That's the conditions I'd like to look at the long side of the euro on. We get the euro. I've been wrong on this. The European Union, Martin, one of my subscribers, properly, and I appreciate, wrote me. I read that there was another meeting on June 22nd by the ECB. I didn't read the title right. I'm getting old. June 15th is the meeting of the European Central Bank. June 22nd is the Bank of England, and we are on the 14th when we get ours. So you got a week with all this information. I'd like to see what the euro can do with that. I'm looking to see if the market comes alive because I'm convinced they're going with a rate hike. In the Canadian dollar, a whipsaw event. This is a market that up until just now was hoping that the bank was through. The bank comes out and goes, I'm raising rates. And the raising of the rate was bullish the currency. Now you're up to the Bollinger Band. We're between here and this whole area. I'd say the market's now properly valued for the moment. In the Japanese yen, we also are going to get from the Bank of Japan shortly their decision. I think it comes out this week too. And I am looking, already the analysts are saying the bank is going to stand pat. Standing pat is probably bearish for the yen. They want to keep it down. They're not showing by the bank governors at all that they want to lift this. And their stock market's on fire. They got everything firing on the right cylinders. and they're getting inflation under control. I think they're going to sit pat. In Bitcoin, let's give Bitcoin and Ether an applaud. They have taken it on the chin. That's not a market that's fallen apart with that. Now, I do believe at the end of the day, the Binance and that the Coinbase, if they want to do business in America, they're going to pay some fines. I really believe that's going to happen. There's going to be new rules. If they want to do business with American citizens here, they're going to have to comply. The government's not going to give up. The government's going after them. I mentioned this during the week. I gave the reasons. I won't go through it again. Then we get to the differential between Brent and WTI. So far, it appears that all we got was a rumor. I don't know who placed it, that the United States and Iran were getting very close to signing a deal, and oil fell 4%, as you know, on that news this week. Okay, but even if the deal was signed, Iran can't instantly ramp up production. Understand that. Number two, they're producing about 2.7 million barrels a day, something like that. They've got their markets. Yes, they could ramp up production by another million if the deal were signed easily. They'd get Western help to get the oil fields going. The markets would open. I think they could do that, but it would take time. It's not going to happen instantly. And don't you believe that they've got so much oil floating out there they could flood the market on the tankers that are holding storage? It doesn't appear to be the case. The other thing we're not hearing anything about is, what about the SPR? Are we buying back oil? At what rate? How much? Suddenly the administration is tight-mouthed. Maybe they listened to my comments. I don't know, because I've been saying what President Trump was right on. You don't tell the markets what you're doing. You don't surprise them. That's the job of laying groundwork. Hey, we're going to be filling our SPR. You don't tell them the date, the time, what price range you're going to do it. That was absolute insanity, all right? They're doing it wrong. But I have zero faith that the Biden administration knows anything about energy, let alone how to execute getting it back. I am of the opinion they talk the game, they don't walk the walk. I've been in that camp. I'm very critical of them for all the reasons. It has nothing to do with politics. It has to do how they handle the energy policy. It's a disaster. We have a lower low, higher high. There's no setup here, but there's disappointment. If I'm the Saudis, I'm either saying to myself, give it time. It's June. We just announced the market doesn't have to do it yet. They'll see that we're going to cut production come July, and we'll say that we have begun it, and we'll go in the market, and that'll support the market. That's what I think they're saying to themselves. So we wait and see. In the U.S., no trend here either, but all the markets are fighting at that 18-day average. Until they get over it, the bias remains down. In gasoline, this market is churning now sideways. What's the next event for driving? July 4th, not even a month away. So look at how sideways this market is. Sideways markets create monster moves, up or down. This is what moves come out of all my whole career. I learned how to look at this. First thing, I tried to catch them and I got chopped apart. Second thing I did is I said, I'll wait. Some traders, and what I always recommend, if you're an option trader, you buy a call, you buy a put, buy a call, buy a put, let it break out, keep rolling them. When the breakout happens, you've got it. And that's one of the ways the traders try to play that. So, I talk about this and a heck of a lot more because I got a big mouth and I like to talk, and I do it all in my research. Now, let me explain what I do. I write 2 market letters a day minimum, Monday through Thursday. One goes out by noon, the other by typically 8 p.m. at night. I will lead you into ideas about the market and what you're looking at. The morning video that I have covers all the futures markets, and the one on the S&P and the ETFs and the stocks covers the ones that I want to cover there. Then I do special reports as well. But my full research, you're getting 3 updates a day. You're getting the morning subscriber video. You're getting an update just before noon and one at 8 at night. And in addition, special updates when I see them. You got your way going. So I'd like to show you this, free. All you need to do is go to my website under the word free offer, give it a click, away you go. You can move your cursor up here. That'll do it just as well. And you can always call my staff on Monday. They're not there over the weekend, and they can get you set up right away. I'm Ira Epstein. You have a great weekend. The weather looks like it's going to be beautiful around the country, and maybe we get rid of some of that bad haze and the fire smog, and we'll see what goes on. See you Monday.